The screeching halt in equity rally has taken investors by surprise. After starting the new calendar year on a solid note, market participants are looking for cover ahead of the US Federal Reserve's policy meeting. The Federal Open Market Committee is due to meet on Tuesday and Wednesday to decide on the next steps for US monetary policy. Fears that the policy could be hawkish and potentially outline the case for interest rate rises starting in March has spooked riskier assets. Given this, benchmark indices crashed 2.6% yesterday, wiping off all the gains logged so far this year. The BSE Sensex plunged over 1,500 points, while the Nifty 50 gave up the crucial 17,150 level. With this, the indices have broken below their key support levels, indicating a wild ride ahead. Let's go to Business Standard's Avadhoot Bakkar for a tech check.
In the last week, BSE Sensex tanked over 2,000 points and Nifty 50 breached the significant support of 18,000 levels, overall losing 600 points. This weakness has seen further decline on the first day of the current week. The next support for Sensex comes at 56,700, whereas for Nifty 50, it falls at 16,900 levels. One can attribute this volatility for the upcoming budget session, but as long as these crucial supports are held, one can see a sharp recovery.
The pain in the broader market is more severe, which is a cause of concern. The mid-cap and small-cap indices on the BSE have cracked 8% each in a week. Individually, Spandana Sphurti, Vodafone Idea, Max Healthcare, PI Industries, Info Edge India, Mindtree, PTC India, Havells India, Tech Mahindra, Emphasis, and Aurobindo Pharma are some of the stocks from the mid and small cap segments that have lost between 10% and 28% this far in 2022. At present, 221 stocks in Nifty 500, nearly 44%, are trading below their respective 200 DMA, with Apollo Tyres, Finolex Cables, Jindal Steel and Power, Wipro, Godrej Properties, Adani Ports and Special Economic Zone witnessing intense selling pressure. And if the global sell-off continues, marquee names like Ambuja Cement, Axis Bank, BPCL, Divi's Lab, HDFC Bank, HDFC, Hero MotoCorp, HUL, SBI Cards, Wipro, and Tata Steel may see aggravated selling, as uncertainty around the tightness in the policy, along with the upcoming expiry and the union budget, could keep the space volatile. Analysts advise investors to stay away from the mid and small caps for now and use the market fall to buy large caps.
Stocks like Apollo Tyres, Jindal Steel, Godrej Properties may lose another 5 to 10% as they have lost the grip of 200 DMA, which traders and investors prefer to be a key indicator. In small cap, NBCC, REITs and Just Dials may see further decline that could rise to 10%.
That said, Jitendra Gohil, head of India Equity Research at Credit Suisse Wealth Management, doesn't anticipate India's valuation premium to materially derate in the near term, given marked improvement in macro fundamentals and strength in corporate balance sheet. Currently, he continues to maintain a moderate overweight position in mid-caps. As regards today, investors will eye the two-day meeting of the US Federal Reserve, bond yield and oil price movement, and news flow around likely budget announcements. That apart, Q3 earnings of Cipla, Maruti Suzuki, Lodha Developers, and 60 other companies will also be tracked by the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.